Hello, and welcome to another interactive session on our live webinar series Moneyfy Mantra, where we speak to our industry experts on various personal finance topics to help educate our viewers on managing their personal finance more efficiently and empowering them to build and grow their wealth. My name is Harsh, and I would be your host for today. So, पिछले 2 साल में हमने दो बड़ी चीजों के waves देखे हैं, मतलब किसी ने ऐसे देखे नहीं रहेंगे, but we have seen waves. वन ऑब्वियसली कोरोना का पैंडेमिक आया जिसकी वजह से हमारे देश में लॉकडाउन लगा एंड लोगों के लाइफस्टाइल में बहुत बड़े चेंजेस आए, उनके काम करने के तरीके में चेंजेस आए, लोगों के रहन सहन में चेंजेस आए, लोगों को वर्क फ्रॉम होम का एक अपॉर्चुनिटी मिली है या फिर लोगों ने ये तरीके से काम भी किया है. दूसरा एक बड़ा वेव जो हमने देखा है वो है पब्लिक का डायरेक्ट शेयर मार्केट में इन्वेस्ट करने का. सो to just throw some numbers, we have in last 2 years, close to 3.9 crore demat accounts have been opened in India. This is a report published by Business Standard. With this wave, बहुत ज्यादा retail investors आपके और मेरे जैसे शेयर मार्केट से जुड़ गए. अभी जब इतने ज्यादा लोग आए हैं शेयर मार्केट से, तो सबको एक ही क्वेश्चन है, हाउ टू बी मोर सक्सेसफुल इन इक्विटी मार्केट्स. There's one quote from Three Idiots. सक्सेस के पीछे मत भागो, एक्सीलेंस के पीछे भागो. सक्सेस झक मार के आपके पीछे आएगी. So this, I just wanted to share this quote to give you some importance about so लोगों के इन्वेस्ट करने के तरीके में, while people will have their own way of investing, but there has to be a structure to how people invest. So to get that excellence, we have a very interesting topic for today, which is on Smallcase. It's a platform for through which one can structurally invest into equity markets. So to cover this topic, we have Pavana from the Smallcase team. Hi Pavana.
Hi Harsh. Hi folks. I'm very, very happy to be here. Thank you for having me.
Yeah, Pavana. So Pavana comes, with more than 7 years of, professional experience in marketing. She holds a master's degree in communication. She's joined Smallcase team in 2019 and heads the growth and marketing team at Smallcase. So before we jump for our topic for today, let me give some more details on our very own Tata Capital's Moneyfy app, which offers a complete suite of investment products with 100% digitally. So you can plan your finance, you can start your SIP, you can invest through Smallcase on Moneyfy. If you want to open a fixed deposit, you can start. If you want to open a retirement account, through NPS, you can open your retirement account through Moneyfy. And in case you need any loan or insurance related products, you can apply for it. So it basically covers all your personal finance need into one shop, and it's largely created for our millennial audience. So in case you want to download Moneyfy, the link we have given in the description below. So please do check and explore our Moneyfy app. So also about today's session, in case our viewers have any comments or have any question, they can post it on the chat window. We would take those questions towards the end of the session. So yeah, over to you, Pavana.
All right. Thanks. Thank you so much. I'm going to share my screen, and I'll also turn off my camera in case there are bandwidth issues. Right. Right. Is my screen visible? Harsh, is my screen visible?
Sorry, I was on mute. Yeah, Pavana, your screen is.
Oh, okay, cool. All right. So I'll try to speak in English, a mix of both Hindi and English, but I prefer English as a medium here. So I'll try my best to speak in both languages. Right. So I'm Pavana, and like Harsh said, I am the marketing manager at Smallcase. Right. So now with this topic, foundations of wealth building with small cases, I thought, I will also tell you what the agenda or what I'm going to talk about so that you understand, how this is going to progress. Right. So pehle to I'll talk about risk of investing in equities, जो सबके दिमाग में है, right? And what are the different types of risks they are, how to identify them, different ways to offset the risks of investing, right? And benefits of starting early. Is compounding a myth? Why should you start early? How early should you start, right? And who should start investing in small cases, right? These are the three things that I will talk about. If you want to know what small cases are and all of that, I will explain that also in detail. But primarily, I think because this is about, foundations of wealth building, I will focus more on these subjects, right? So now, learning risk with bananas. Now, why bananas is because that is something that we relate to, because that's something we buy on a daily basis as well. And if I talk about market and use jargons, it is not going to be of any help to you, right? So, bananas लेके चलते हैं. जब हम बनाना खरीदते हैं, तो एक तो होता है internal factors. कब ripe होगा? If I buy very green bananas, then it will not ripe for the next week, so I don't have anything to eat for that week, right? Or if they are very spotty and black, none of us like eating it, right? Or if the type of banana I've bought is not the right type of banana for me to consume right now. There are different types of banana, right? The long ones, short ones, right? Sweet ones, not so sweet ones. And if you come down south, then there are Kerala bananas. There are so many different bananas like that. Associated it with the equity markets as well. Day to day price change hota hai, right? So today they say market is up, today's market is down. What up and down means is that आज बहुत ज्यादा खरीदारी कर रहे हैं किसी किसी कंपनी को, या किसी किसी कंपनी को बहुत ज्यादा सेल कर रहे हैं, तो मार्केट थोड़ा डाउन है. अगर बहुत सारे लोग सेल कर रहे हैं तो मार्केट डाउन रहेगा, बहुत सारे लोग खरीद रहे हैं तो मार्केट अप रहेगा. तो क्या होता है कि जब जब किसी चीज का प्राइस डाउन हो गया हो तो उसको खरीदने का ये ज्यादा रहता है. फॉर एग्जाम्पल ड्यूरिंग द एंड सीजन ऑफ मैंगोज, द सीजनल फ्रूट्स, प्राइस कम हो जाता है तो सब लोग खरीदना फिर से शुरू कर देते हैं, राइट? समथिंग लाइक दैट. नाउ देयर इज स्नोबॉल इफेक्ट. मतलब फॉर एग्जाम्पल व्हेन सम वायरस केम इनटू पिक्चर इन इंडिया, सबने बोला कि बनाना के वजह से एवरीबडी स्टॉप्ड बाइंग बनानास. इट्स अ स्नोबॉल इफेक्ट. हमने नहीं खरीदा, बगल वाले घर वालों ने नहीं खरीदा, सो ऑन एंड सो फोर्थ, राइट? पूरा का पूरा बनाना started getting wasted. Like that, even in stocks, you will hear news or some market guru saying कि sell X stock, buy this stock, ITC पता नहीं कब कितने जमाने से एक ही प्राइस में है. These are all different jokes that you hear from people and you don't know what it means or what it reflects, right? So what it does is it creates a small snowball effect. मतलब मैंने नहीं खरीदा, बगल वाले ने नहीं खरीदा, because everybody is selling or not buying. What happens is things become big. What snowball means is एक छोटा सा रहता है, and because it keeps flowing, right, and it will collect more snow and become a big snow, right? So like that, it even when you're buying stocks, same things hold good. Now, brand or company itself is bad. Say something went wrong, their business didn't turn well, so they didn't have money to put more banana plants, or the entire industry itself is suffering, say because of corona or something, right? So all of these things can affect. What liquidity means is that, like I said, no, there are not enough people to buy it, so nobody is selling it, or there are not enough people to sell it, so that is liquidity, right? So liquidity risks are involved in all businesses, right? That's what liquidity risks mean. For example, a company, right, which is with high borrowing, like it has borrowed a lot of money, right, may find it hard to pay off debt, right? This may lead for them to cut their dividends. Companies give out dividends, right? Dividends are basically profits given to their shareholders. Matlab, I have bought, for example, you've gone to a thele wala, you've bought bananas, right? Because you're continuously buying bananas over the last 6 months, he says, "Arey, aapke liye 2 aur banana muft," right? So that is something like a dividend. So what happens is, because they don't have enough, they've borrowed a lot of money, वो क्या करते हैं, dividend cut करते हैं, या business ही खत्म हो जाता है, right? So that is what a liquidity risk is, Now, these are all internal factors. What are external factors? Something that is external to the market itself, right? So, say, for example, inflation. टमाटर के दाम बढ़ गए, लेमन के दाम बढ़ गए, right? What we do is people, wherever it is, obviously नींबू शरबत में तो you can't replace it, but if you're thinking of like a sabzi where I have to put limbu, I'll probably put amchur, right? Like that. What inflation does is also, it'll be like, why should I buy this right now? I can buy this later, sort of a thing. Then there is tax. So, for example, I have a total money of 100 rupees, I as a company, right? And the tax levied by the government till now was 90. I'm keeping it very simple. So, of course, there are a lot of other things also that the company has to take care of. But think of it as a 90-10 split between tax levied by the government and my working capital. In my working capital, a lot of things are involved: paying my employees and all of the other customs, vagera, vagera, and all of that, right? So I have 90%. Now, kal, if government increases 10% to 20%, then my working capital reduced from 90% to 80%, right? So these external factors also, if I'm not able to sustain my business with the increased tax levied on me, then also my price, can affect, right? So next is interest rates. Interest rates are also something. Higher interest rates, meaning that the raw material that I have to buy will become expensive, so I will not be able to buy more things. Regulatory risks, for example, let's take McDonald's. Yes, very very US theory. This is the minimum wage theories, right? So in US and all, there are things like minimum wage. एक मैकडोनल्ड के एम्प्लॉय को इतना ही पैसा देना होता है, ये मिनिमम देना होता है एक एम्प्लॉय को. स्टारबक्स, मैकडोनल्ड, ये सब जो कंपनीज होते हैं वहां पे, तो वहां पे क्या होता है, इफ एट ऑल पर्टिकुलर स्टेट इज फाइटिंग और दे से कि मिनिमम वेज इससे $7 से $10 करना होगा या $10 से $15 करना होगा, right? These are very small things, but then because McDonald's is such a huge company and there are so many people involved, again their working capital reduces. So these are regulatory risks. Then there is definitely cyclical seasonal factors. Some bananas don't grow in some seasons, some mangoes don't grow in some seasons, like that. Some companies, for example, your chhata wala company, your AC wale companies, all of these things are very cyclical in nature. They're not sold at all times, right? So some of these are very cyclical, so it gets affected by that as well. Some things are very high. For example, I'll tell you why it matters, right? A rainy season aa gaya, so then farmers will need tractors, they will need pipelines, they will need money, so they will need a loan and all of that. All of these are cyclical in nature. When it is the right season for these things, then farmers will start using all of those things. So many companies are getting benefited by it, right? Whereas when there is a drought and the farmer is not able to do a lot of things, then he will not buy all of those things, right? So cyclical factors also matter here. Then there is psychological factor, fear of losing money, the worst kind. अभी मैंने इन्वेस्ट कर दिया, अभी कल डाउन जा रहा है, मैं निकाल दूं पैसा, right? Or there are so many people who are giving tips today. YouTube is a huge place for a lot of influencers. Some may be good, some may not know as much, or something will simply not work for you, because when what tips are given are considering different factors. That factor may not apply to you. For example, with somebody who has like a 10,000 salary and is getting some tip, and using that tip, if he invests or he or she invests, then if something goes wrong, then that also will leave a bad aftertaste. You will never want to like, अरे एक बार खराबी था, अभी फिर से क्यों करना, right? Or taking advice from multiple people. That is also another psychological factor. So the fear of losing money can actually, get you to sell, like go on a selling spree or on a buying spree, right? अब सब लोगों का पैसा डबल हो रहा है, मुझे भी खरीदना है, right? So don't do that. A lot of things are very dependent and very specific to you. So you have to be very careful, right? So these are about the risk factors in market. Why I gave the example of banana is because you have to understand that risk is there in anything, including while you're buying bananas, right? It could be bad. That batch could be bad, right? So stock market in the end is about putting your money and the money working for you. And you're buying a banana, you have got the commodity, you've got banana. Uske baad jo hota hai, wo hota hai. But with money, it's like you've put money and the money is working over there on its own for you, right? So for that, a lot of these factors come into picture. Now, identifying them for somebody who's very new is going to be very difficult. The ideal way, that anybody has to look at market is to be in the market for the long run and get the benefit, because I'll tell you why being in the market for the long run is important, right? So time, it allows you to make mistakes. Say one day you invested and then there is minus 0.3% loss, right? Then like a loss ho gaya, ab mera paisa, whatever I had put kam ho gaya, right? Then you'll be like, theek hai, ek aur mahina wait karke dekhte hain, but it's down by 2%. It's like, are I had this much only money, 17,000 I had put, right? Now it has come down to 15,000. 2,000 का loss हो गया मेरा, right? But then same thing when you look at long term, right? Nothing out of the ordinary. 5 years, right? But if you look at it, you're seeing that there is 71% returns. See, it started at 6,900, right? 6,900 is the jump in the number. It started here. When it ended here, there is 71.6% profit. This between June 7, 2017 and March 31, 2022. So what it helps you do is it helps you, trial and error karke fix whatever you're trying to do, understand the market, and then you don't just look at it from outside and you make changes. You can't do that, right? Once you're skin in the game, once you've already invested, you make tweaks as much as possible and then you gain from that, right? So that's how, unless there is a mass, when corona hit, right, this low that you're seeing here, this is the lowest point when corona hit first time and the markets fell, this fall you're seeing. But you should also notice that even from this fall, this is a huge gain, right, in the 2 years. So, and if you see this fall that you're seeing here is actually this small anthill here, this small one. तो बहुत ज्यादा छोटे छोटे चीजों को छोटे छोटे इसको नहीं देखना चाहिए. These things will always pan out because markets over the long run, history में ऐसे देखा गया है कि over the long run markets always have worked well, right? Again, it will be very unfortunate if you started here and you exited here. That's also one way to see, right? So what I'm saying is that when you exit also is very important. But in this case, if you see that even if you had invested here, then you would have gotten a lot more profit over the last 2 years, right? So that's why staying in market is important, right? Versus actually just looking at it from outside and thinking, "Arey, abhi nahi karenge, baad mein karenge, ab low hai, ab," that day will never come then, right? Trust me, I'm talking about all of this. Until I joined Smallcase, I knew nothing about finance or investing. Nothing. All I did was gave all my money to my mom and asked her to, put wherever she knows best. Right. But then after I joined Smallcase, I understood all of these things and I found that they're very simple to understand. I don't have to really look at candlestick and all of that. I just need to understand basic ideas and then start investing. Right. So, compounding is another thing that everybody talks about, and it might sound like सब लोग ही compounding के बारे में बात करते हैं. What is so important about it? Or I mean, is it really, does it really work? What is compounding, right? I'm sure 10th May we have learned about compounding, but except for compounding, I think all of the geometry, arithmetic that we have learned, I don't know how much we have applied, but compounding I think is very, very important. And I will, in again, simple terms, try to explain what compounding is. When someone takes 100 rupees from you and you charge like a 10% interest rate, for a year. They should ideally give you 110 back. But if they don't give it in 1 year and you decide to charge them like 110, then you are charging them compound interest. Matlab, instead of telling them ki agle saal, 100 pe hi, 10% or de do, you're telling them, you did not give me 10% for this 1 year. So next year onwards, the amount is going to be 110. So 110 ka 10% dena. Right? So that is compound interest. Now, this is about buying and lending, or giving and lending. If we think of it as a investment, right? So if you're putting like 1 lakh rupees in something like a fund or a small case, right? And if you allow it to compound at a rate of 12%, right, for 15 years, then it becomes 5.47 lakhs. Right? So 1 lakh invest kiya tha. After 15 years, it is becoming 5.47 lakhs. Right? So that is what compounding is. And it works on a lot of different things in the market, like your SIPs, your regular lump sum investment, like you had 1 lakh and you invested, right? But what if who has like a 30,000 salary per month, how will I put like 1 lakh at a time, right? So that is where SIPs come into a place. Say your goal is 1 crore and you start investing at the age of 25, right? You will need to do an SIP of say 1,540, assuming that small case or that fund or that stock, is returning 12% per annum, right? So if you start investing when you're 35 to get the same 1 crore goal, then you will have less amount of time, right? So you will only have 25 years until you become 60 for your retirement. So instead of doing 1,540, you'll then have to do 5,270, right? So that is the difference between starting early and starting late. The goal is the same, the returns is the same, but the time that you have in the market will be lost. So here, what I told about losing money, gaining money, and all of that, you don't really have to stay invested lump sum. मतलब 1 लाख 1 साल लगाने की जरूरत नहीं है. You can start small with SIPs every month. As soon as your salary is credited, say you put 1,500 rupees is a small amount, right? Considering you don't have other expenses or severe expenses like that, right? So you put 1,000 rupees aside, right? And then you do rest of your expenses. Now, why SIPs? And I'm sure you have heard SIPs also enough number of times, right? Why SIPs is because it truly has worked. Now, this is a SIP Insights report of 2021, right? And if you see here, SIPs stay true to their cause, right? While yearly SIPs have seen ups and downs, the average return of over 16% show how investing consistently through SIPs give great returns. If you see this, that's what it's trying to show. There is ups and downs, but it has given consistent returns, for medium to long term, right? Next is a lot more people are investing in SIPs because they're understanding the benefit. One benefit, the other is that it's not heavy on your pocket. Instead of putting like 12,000 at one time, you're putting 1,000 every month, right? So you will not feel it very heavy on the pocket. Investors getting more habitual when it comes to continuing their SIPs. More than 70% of investors now don't stop or miss a single SIP installment once started. Right. So this is back in 2017, only 49% people continued it, whereas in 2021, the number is at 73%. Right. So SIPs are the easiest way for you to actually, save money or, stay invested in the market. Now I told about all of these SIP, this 5,000 rupees. Is it enough for you? Is 1,000 rupees the right amount for you? All of that can be a little overwhelming. So these 4 rules, I thought I'll just talk to you about. Again, this is no way an advice, or it is not my place to tell you what you should do with your money. I thought that this is a very easy way for you to figure out what you can do with your money, and then take it ahead. For example, there is a very common rule of 72, meaning how long does it take for your money to double? Right? That is 72 divided by rate of return. Meaning, I told you here, right? 1 lakh, if allowed to compound at a rate of 12% for 15 years, becomes 5.47 lakhs, right? So, assuming that the rate of return here, what they're talking about is 12%. And here we're talking about compound interest only. We're not talking about simple interest, right? So, how long does your money take to double is 72 divided by that rate of return. Say a particular stock is giving 15% rate of return, then how long would it take for that money to double? So 14 and 144 are how long would the money take to triple and quadruple, right? All you have to do is 114 divided by 16, considering that is the rate of return, or 144 divided by 16, which is the rate of return. So that the number you get is the year, the time taken for it to compound, right? Next is minimum 10% investment rule, right? I'll tell you the drawbacks of each of these rules as well, so that you, again, don't follow any of this blindly. You will have to apply it for your salary, your commitments, and so on and so forth. I'll tell you why again. Say, the rule says that you have to invest 10% of your current gross salary and increase it by 10% every year. For example, I have a 10,000 rupees salary, right? And I do a 10% of my gross, gross salary, and I keep increasing it. But consider that you have a loan, okay? And the loan percentage is somewhere about 20%, right? Or it is, say, 17%, 15%. It is higher than 10%, right? So saving 10% may not be enough because it is offsetting by the debt that you have, right? That you have to pay back to the loan company, like a bank or some other fund that you have used, right? So the minimum 10% rule, also take it with a pinch of salt, but if you're in a good place, then you should definitely start by investing 10% of your investment and then increase that. Say it's coming up to 40,000 is your salary, it's coming up to 4,000, right? I'll show you with the worksheet in a second, right? The next is emergency fund rule. So what emergency fund rule says that put aside funds to last you at least 6 months, meaning, say, every month your rent, khana pina, and your basic, not your wants, your needs, movie dekhna, bahar jana, all of that is wants, okay? Your needs are khana pina, and then rent, and then probably clothes for your office, right? Since we're all going back to work now, these are all needs. So how much money you would require for a month, you multiply by 6 and you keep that aside, so that if in case you lose your job or you have to quit your job for some reason, you can survive for 6 months. That's an emergency fund rule. And you save it, you keep it aside, it's not accessible to you. Next, I thought this would be fun for you to know. A lot of people talk about iska net worth utna hai, uska net worth itna hai, right? Especially with Mr. Elon Musk, like his net worth is this much and that much. I thought it'll be fun for you also to probably figure out. So this ideally was made for Americans, but I've converted it, obviously with the help of internet and other things. I have figured out what is the ideal way to figure out your net worth if you're an Indian, right? So age, say 30, into pre-tax income, right, divided by 20 is your net worth. You have to divide it by 25 if you're in the 20-ish age range, right? I'll quickly show you with a small worksheet. Harsh, is my worksheet visible?
Yes, Pav.
All right. So this is the 10% rule that I was talking about earlier. Your salary is 40%. 10% of it is 4,000, right? And the next year, you're going to increase it from 4,000 to 4,400. And then it becomes 4,800, right? So like this is the 10% rule. But considering, say, you have a very good salary, like a 1 lakh per month or a 2 lakh per month, then you have the capability of saving 20% of your salary. That is also a very good way to do it, right? So that is 8,000. And then the same thing applies, right? So you have 4,000, then you increase it by 10% every year. The other thing that I was talking about was the rule, right? The amount of time it will take to double. Say you take a CAGR of 10%, or let's take 16%, right? So 16%, the amount that you're investing is 8,000, right? How long will it take for this to double? 72 divided by 16, which is the CAGR here, right? So 8,000 will become double after 4.5 years. In this case, it will triple in 7.2 months, right? And quadruple by say 9 years, right? So that this is how the doubling system works. Again, you have to understand that this is not super accurate, right? This is only indicative so that you know what you have to do with it, right? And this is the net worth thing that I was talking about. Say you're 30 years of age and your pre-tax income is this much. Your net worth is 30 into this divided by 25. 25 if you're 20-ish. Otherwise, you have to divide it by 20, right? So that is your net worth, right? Not much. I know it looks very meager, right? That too, assuming that your income is that much, right? So this is the last one. So this, I thought I will show you how different it looks, right, when you're investing for the long term. So Reliance, consider that the price is 2,500. Your week's profit is going to be, I'm considering 4% returns here. Your week's profit is going to be 100, but your month's profit is going to be, 250. But when you're investing more, you're getting more in return, right? So this is the difference between investing more and staying for longer in the market, right? So these are different things. I'm closing this tab, and here again, right, I thought I'll just tell you again, some of these things may not work for you. Like I told you, if you have debt higher than 10%, it will not work. So you'll have to increase that. Or if you have, it's very easy for me to say ki, put 6 months, money for 6 months aside. Maybe it's not possible for you right now. Keep for 3 months and then add 3 months later, right? So all of these things are very indicative for you. Figure that out, and then you can, change it accordingly, right? So next is who should invest in small cases, right? Before that, what are small cases, right? So small cases are portfolios of stocks, ETFs, or REITs. Now let me stop you right here. Till now, I was only talking about stock market. I was talking about companies. Now suddenly 2 new foreign words are introduced. ETFs are something like mutual funds. I'm sure all of you have heard of mutual funds, right? But mutual funds don't trade in the market. You invest in them, right? But stocks, you trade in them. मतलब you सुबह को Reliance 2000 में खरीदा, शाम को अगर market पूरा down है तो you probably are selling it at 1,800. But if the market is good, then you're selling it at 2,500. That is trading, right? ETFs are baskets of stocks. क्या होता है? Each ETF will have a theme. Like volatility, low volatility के companies को ETF में डाल देते हैं. ETF is nothing but exchange traded funds. Very similar to mutual funds, but they're traded on a daily basis, right? REITs is a fairly new concept. It is something like buying real estate, in the stock market. Very, very simply put, it's not that easy. You'll probably have to read a little. If you're interested, then we can probably share some reading material with you on what REITs are. And these are all weighted to track a theme, strategy, or objective. I'll simplify this as well. Now, earlier I was talking to you about tractors, farmers, and all of that, right? Let's also think about things like digital inclusion. For example, a lot of smaller towns, villages are getting good, network connectivity now, right? That is digital inclusion. There is Tata Sky everywhere. There is internet everywhere. There is electricity on almost all places. I wouldn't say everywhere, but yeah. So India is also, the government is also helping, increase this penetration of digital inclusivity of India, right? So, but how would you or I know which company to invest in, right? So, small cases are baskets of such stocks based on themes like the one I told you, or strategy. Say you only want dividend paying companies, that's a strategy, or an objective. Like your objective is that, ye sab chahiye mujhe, right? From that, and that based on that objective, you're investing, right? They help you build long term wealth in the right manner. I'll explain what small cases are with an example, going forward. Who creates small cases, right? Small cases are curated and managed by SEBI registered research professionals. They could be research analysts, research investment advisors, and they all eat, breathe, and live the markets, right? Unka, jaise we work, 9 to 5 jobs or sometimes 9 to 9 jobs, they also do this with the markets. They know each stock back of their hand, right? So they are the ones who create small cases. Now, what are the different features of small cases? I'll get to it. But if you've already got some idea of what it is, you can find out where small cases are on the Moneyfy app. On the main page, you'll be able to see equity basket of stocks. You click on it, you'll come to a page like this where it explains what small cases are, read through it, and then proceed. You'll come to this page. Here, you can read this page as well, and you can discover small cases. Once you click on this, it will show you different small cases that are available on Moneyfy, and you can invest in it. You can choose whichever broker that you want. We have 15 brokers today. You can invest in any one of them and, start building wealth, right? So what are the different features that we have? You can track performance, not of individual stocks, but of that entire basket as a whole, right? You will also get to know CAGR. CAGR is compounded annual growth rate. What I was telling you earlier, right? Compounding interest, rate of return, right? So CAGR meaning how much that particular fund or a small case has annually grown or is expected to grow based on past returns. So you will see on the small case page, you will see like a digital inclusion, 4-year CAGR, 18%, or a all-weather investing, 4-year CAGR, 11%, right? Meaning that over the past 4 years, the annual growth rate has been 11%, right? You can also see news, for example, like I told you, right? Tractor and all of this. So if there is any negative news around tractor, you don't have to Google it outside. And not just tractor, that particular company that is present in that small case, you can see that. You can see past performance and you can see more. Then you have, I told you about SIPs, right? Systematic investment plan. You can invest consistently with SIPs as well. And in case something goes wrong and you don't want to stay invested or don't want to continue with the SIPs, you can edit them or stop them as well. Edit in the sense, say, you don't want to do like a 5,000 SIP every month. Instead, you want to do like a 8,000 SIP, right? You can do that. You can edit at any time or you can stop it as well. Now say that you only invested, first you wanted to try, so you only invested like 20,000, but then you're liking how it is growing. And then once it has grown a lot, you will not be able to invest more at that time, right? आपने जब वो 20,000 जब वो से 10,000 का था तब आपने इन्वेस्ट किया, अब वो almost 15,000-16,000 हो गया है. You're like, I want more of this so that I can get more benefits, right? So you can invest more. So double down on your invested small case in just a few clicks. Portfolio rebalance. Now, I told you, right? Cyclical, कुछ चीजें, market से बाहर चली जाती है for some time. So portfolio rebalancing is very important, not just for cyclical reasons, for a lot of other reasons, right? So a company may stop manufacturing a couple of things, that time for that particular small case, that stock will not hold any importance. So small cases are reviewed by these experts to keep them on track and so that you can get to the goal, as you intended, right? So आपको notification आएगा या तो आपको email आएगा, आपको 1-2 बटन दबाने हैं and वो rebalance हो जाएगा. Auto rebalance नहीं होगा. Without your consent, nothing will be done, right? So you'll have to approve rebalancing. Most small cases have a quarterly rebalance. Some small cases have yearly, while others have half yearly. You can check all of this on the small case profile itself. Next is manage investments. For example, sub CK, you've become very nippon and you know what to do with each of those stocks. You feel कि इतना इसमें रहना ही नहीं चाहिए, इसको इसमें, or you don't like that particular company at all and you don't want to invest in it. So आप invest करने के बाद you can remove those stocks, from your small case, right? So these are some of the features that we have. You can discover, choose, log in, and invest. It's easy access. It's integrated with your existing broker account. And in case you do not have a demat account, you can open one on the Moneyfy app easily, right? You don't need separate accounts. Say you're already invested in some stocks with some other broker, right? And if that same broker is available on the small case profile, right? We are live with, top 10 brokers and others as well, right? So more likely you are in one of those brokers itself. If you're not, then you may have to create an account. But otherwise, the same account that you're investing with your stocks can also be used for investing in small cases. And stocks will be delivered directly to your demat account, and dividends are paid directly to your bank account, right? So that's the benefit of building wealth with small cases. Now you can become a better investor, and you can start with small cases on Moneyfy. Moneyfy also has a lot of other features for you, like Harsh explained in the beginning of the webinar. Please feel free to go through Moneyfy app and check out small cases and other investment options there. Over to you, Harsh.
Hey, thanks, Pavana. It was really insightful to get some understanding, with an example of bananas. I'm sure our viewers would take some of these examples and try to use them while creating their portfolio. So Pavana, if you can just unshare the screen and would request you to turn on the video if possible.
Yeah.
So we have some questions. Before we cover the questions, I think I'll just also give some background of. So we had done one more session in March, where we had covered in detail how an individual can start his investments on Moneyfy through for small cases. It's a very extremely easy process. And to cover some questions we've got, can you give some examples of the ideas which some of the investors can explore through small cases?
Yeah. So one, I think very I would say a small case that is built for everyone, sort of a small case, is all weather investing. Like the name suggests, all weather investing is for all market conditions and for everyone, right? You may be somebody who's new to the market or very have been in the market for a long time. It's ideal for anyone, right? So that one is all weather investing. Then you have other small cases like dividend aristocrats. It gives it includes companies that have consistently increased their dividend payouts in the last 10 years, right? So again, dividends are profits that a company shares with you for being a loyal customer, right? Then you have digital inclusion, the one that I spoke about some time ago. And you have rising rural demand. Like this, there are a lot of small cases on the Moneyfy app. You can check them out and invest in idea that you relate with, that you understand, and you think that yes, I can invest in this.
Correct. Yeah. So there are a lot of ideas. If not restricting to some of these ideas, there are a lot of other ideas which an individual trader might want to implement. So can someone do a custom portfolio creation through small case?
Customizing a small case is possible, but that will mean that you will not get any future rebalances, right? Because you've changed, you've moved away from the original theme, right? So somebody who's creating a small case, as in the professional who has created a small case, will not know why you have deviated. So that is now a different small case, and you will be responsible for all the rebalances. So you will have to do all of the fundamental analysis and change it, right? So that is one thing about customizing a small case. But sure, you can do that. If you, like I said, if you know a lot about markets, you can definitely customize or create your own small case as well.
Okay. So everyone knows one has to save his money in mutual funds and equities. So how should one approach small case? Is it as a proxy to mutual fund or proxy to his direct equity investments, or some other proxy which someone want to get small case in their portfolio?
Got
How
it.
should one ideally approach small case?
Got it. So small case is not like only have small case, don't have stocks or don't have mutual fund. It's not a proxy. What small case is an additional product for you to have, because, for example, now some mutual funds have lock-in periods, so you'll not be able to exit. Whereas stocks are very, you'll have to keep a constant eye on it and as to what is happening, because nobody is rebalancing it for you. But if you still know a lot about trading and all of that, then sure. Or if, for example, Maruti, one of those stocks that people of my parents age are like, Maruti, he has become lakpati because of Maruti stock, right? Some stocks are like that, and you are inherently lucky when you're investing in such stocks. Small case is one of those instruments where there is no lock-in period for you, so you can exit at any time. There is no minimum threshold also. Some products have, like, you have to invest a minimum of this much amount, right? You don't have that. Whatever is the stock price in that particular small case, that is what is calculated, and that is what you have to pay, right? So these customization options, these exiting at any time wala option, that complete control that you have, right? It's a good way for you to diversify your investments. I was telling about emergency funds and all of that earlier, right? Similarly, if you're investing in FDs, then they have a 5-year lock-in. If you're investing in mutual funds, some have 3 years, some have 1 year, some have different, some don't have any, right? But still, these are all long-term products, right? Then you have single stocks that I told you about earlier, but you'll have to keep a constant eye. Whereas small cases are curated by professionals, again, like mutual funds, but they work like single stocks because you get them on demat account. So what happens is that you have a lot more control over your investments. And if there is some emergency, for God forbid, you have the chance to remove your money from small cases at any time. And it's a good way for you to get benefit from a trend like electric mobility, right? A lot of people are buying electric vehicles. No comments on Ola currently, but sure, there's a lot of thing going on the electric mobility side of things. So you get a lot of mileage from that by investing in small cases that are based on those themes.
Correct. So, typically, say for example, I am a trader, investing into equity markets, and Smallcase is a platform, offering its own solutions. So, how, as a trader, will while using Smallcase, will my life will get more easier in terms of investing? If you can just cover some bit of it.
Sure. So think of it this way, that see, we all love Maggie, right? Trading is like Maggie, 2 minute ka kaam, right? Abhi dala, abhi nikala. But we also loved mama ka, that dal makhni, right? With slow cooked dal, because it's amazing. So there is no harm in actually having both. Have some bit of trading and have some long-term investments as well with small cases. One way to see it. The other way is, if with stocks, you're investing in 5 stocks and 5 clicks, you need 5 individual clicks. Whereas with small cases, you're investing in 5 stocks with just 1 click, or how many ever stocks that is there in a small case, right? So it's saving you time as well, and you're in it for the long haul, like long weekends, long holidays, and slow cooked dal. I think long term investments are also something that you should have along with the trading practice. It's a good way to diversify there as well.
Correct. Okay, so last question for today. So while one would want to initiate to invest in small case, So what are the minimum requirements? So while people can look at a more detailed video, which is the link for which is given in the description. But do I need to have a demat account, for starting investments in small case? What
Yeah.
if I don't have?
Got it. So if you have a demat account with the 15 brokers, you can check them out on the Moneyfy app. Then you can simply invest with the same account that you have. You'll just have to link it, right? If you don't have an account, then there is an option for you to open an account on the Moneyfy app itself, right? Currently tied up with a couple of brokers. You can open with them and you can start investing. That's the minimum requirement. Second, of course, is money. Some small cases start at as low as 3,000-4,000, whereas some small cases go all the way up to 80,000-90,000 as well, depending on what you want to invest in, right? So start small, see how it goes for you. Then you can start saving some money for investing in these bigger baskets.
Got it. All right. Thanks, Pavana, for a very insightful session on how one can, build wealth through small cases. I think it was covered in a very simple, easy to understand language, and I'm definitely sure, all our viewers would have loved, this session and would take a lot of insights, while reviewing this video. So just a closing remark, for our viewers, if you are, looking to invest, through small case into direct equity, you already have a demat account with some other broker. You can link that demat account with Moneyfy. So to download Moneyfy, I've given the link again in the description. It's a very easy process to start. If you don't have a demat account, don't worry, you can open one on Moneyfy through small case. Thanks, Pavna. Thanks everyone, for listening to us patiently, and happy weekend to all of you.
Happy weekend. Thank you.